Hi, I'm Peter Rose, founder of Longwood Currency Trading. I've made about $9,000 in the last 4 trades following one simple principle. I'd like to go over that with you briefly today. I'm outside. We're at the end of September 2023, and New England. I live in New England, the Lakes region of New England, and we're just starting to see the trees turning. You start with a very gentle yellowish gold type color, and the nights we had a fire going in the wood stove last night, and it was pretty chilly out. And this is the end of September. When I'm looking at the chart, I follow certain conditions in placing a trade. So yesterday, looking at the markets getting ready to open, I had my trade setups all thought out as to, and they aren't setups, they're just this is what I think should happen, and I put my limit orders in and all that sort of thing, and price just wandered around. I had made $6,000 the 3 days previous to that, and so I had my orders set up and made some money that day, and carried the open orders through the night. So when the market went into its busy period, because I'm trading a U.S. Euro pound region type pairs, the orders, first one I staged in, so the first one hit pretty much after the London Open, which would be about 2:30 my time on the East Coast here in the United States. Got up, took my shower, went in, yep, the order had gone through, boom, second order went through, okay, that's fine. Third order went through, now I'm sitting at my desk, having a cup of coffee, and I'm watching this stuff, and price was moving in my direction toward the profit target that I had, but because I had to carry the position overnight and I had looked at it in the morning, I had increased my profit target from, I think it was about a $1,330 profit target to it was about $3,000. And I did that because of this principle that I'm going to be talking about. When I'm trading, and I'm trading in normal conditions where you don't have a volatility or opening or news or whatever, I could place 2 trades, 3 trades, I could even go 4 or 5 trades in a day and just chip away at the price action. But when I see certain conditions lining up, it implies that the order flow is ebbing and flowing in larger increments than it would, quote, normally. Now, normally is an experience-based thing that you really can't learn if you're trading 6 or different currency pairs and oil and the DAX and all the rest of the crap that's out there. I trade one pair, that's it. So you get a feeling for how the order flow, how the institutional traders between those 2 countries are managing their clients' trades that they're putting through. That's what the institutions do. That's the bulk of the $6.7 trillion a day market, is client order fulfillment for people wanting to buy engine parts or 10 bazillion cords of wood or whatever it is that's going on. In conditions where the potential for large inflows and outflows of orders exists, you can extend the boundaries of where your profit target is, because the price from a probabilistic standpoint has the juice to get there. I had originally set, as I had said, my profit target about the $1,300 level. That price came down, tricked off the orders, and got within 3 pips of my 1340 order, and then reversed and turned around and went in the opposite direction. In a normal retracement, price had come down so fast and so far that order congestion, you got sopped up. 3 pips, it turned around and it went back up the other way. Well, how far did it go? Well, it went 20 pips. And that's why I'm telling you guys, you know, if you're trading on a long-term basis and price goes 15 or 20 pips, there's probably going to be a retracement of some kind. Well, price had gone down 30 or 35 pips from where this particular movement had started, and it just got tired at that point. And so I looked at it and I said, well, the retracement will probably be to here. It went a little bit beyond that. I figured it was not going to be quite as steep a retracement as it ended up being, but that's okay. I added to the position and extended the profit target. Price turned around, dropped like shit through a goose, took me out, boom, made $3,150. And here's the trick. I closed the trading platform down and I'm out here talking on the video. Could price move again? Will there be other trading opportunities during the day? Yes, there probably will be. But the potential, because of the size that I trade, is that I could very well give $800 or $900 of that back. I don't want to give any of it back because the probability is not clear as to what price is going to do. This last move, it dropped 20 pips, just boom, and went right through my profit target. I went out, and I don't care what's going on now. I just closed up shop, and I'm out here. And that's the trick. Understanding when you've made a profit as to whether that profit was made against an overextended, and again, that's like a normal price action, an overextended movement, which means that the follow-up to that will most likely be a retracement. And although that's fine, and you can probably figure that in an oversized movement, you have an opportunity to trade a regression to the mean, not a mean reversion. That's a financial term. Don't listen to these people who don't know what they're talking about. But a regression to the mean event, you could probably play one of those. You could probably do several things. The question is why? I made more than I would normally have shot for. Well, my original profit target was $1,300, so I made you know, like double that on this trade. So one could say, well, then in fact you would have been happy with the $1,300 profit target. You got $3,100, so you've got $1,000 or so to play with that you could lose and still end up with what you had originally intended to get plus some. And that's very true. But why give it up at all? Well, I don't have to. I mean, because I'm trading six-figure account, I mean, that trade that just went down was a 20 lot, and I can talk bigger numbers than somebody who's trading 3 full lots or whatever. From a percentage standpoint, you still have to look at that gain. You know, if you take that $3,100 profit and you say, oh, I got $300 instead of $130, the proportion of the move is the same. It's just based on the bank balance that you have. The problem is that you end up making $300 and you think you're a hero, and then you go back in and you lose $100 of that, and that proportion of losing $100, yeah, it's still the same 1/3 against what you had booked before. But the reason that you go back in to try that is because you're struggling to make that money. I'm not struggling to make the money with the larger account, and that's a nice position to be in. The problem with you guys who are struggling and you're trading with the smaller accounts, how do you think that you're going to get to a big account if you try to keep swinging for the fence every day? When you have a smaller account, you have to be aware of your compounding effect over these small gains over the long term. When you have a lot of money that you're trading, you still have that in the back of your mind, but it becomes paramount that your risk management is so critical that you don't lose that momentum in what you're doing. let's see, I've made, let's see, it's 27. Yeah, I've made $30,000 so far this month, in the month of September. Well, we're done with September, so I made $30,000 this month. And I haven't had a losing day. I've had lots of losing transactions, but I haven't had a losing day in the 20 days that I've traded. I've traded every day. I think I traded every day. I don't know. I might not have traded every day. In any event, I haven't had a losing day. And part of the reason in the last 4 of those trades, as I said at the beginning of the video, the past 4 trades, I've made about $9,000 because I've been watching these positions and I'm sensitive to that order flow, well, the magnitude of the order flow. And many of the trades that I've done in the last 4 days have specifically been because of an oversized movement in order flow, which has provided me anywhere from 2 to 3 times whatever my profit target would have been, whether that profit is, you know, $900 or $3,000 like today. And each time that has happened, I haven't traded for the rest of the day. Now, I think, I don't remember how long ago it was. It might have been, 7, 8, 9 days ago. I had one of these events, and I did go back in and trade again. I had a $2,200 gain, and I went back in, and I lost $1,000 of that. I lost 50% of that. And I thought, well, this really sucks. I'll go back in again. I lost another $500. I said, this is stupid. I stepped back from it, had a coffee, didn't do anything for the rest of the day, put some orders in the evening to catch the activity through the Asian sessions as they opened up, even though I'm not trading an Asian-based pair. My orders kicked off, boom, 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 and I made a couple of $1,000 or whatever I needed to make, and I ended up $2,300 up for the day. But I lost $1,500 intraday because I went back in. I could have avoided all that grief, and I was trading all day long. I don't want to trade all day long. All I want to do is trade for 15 minutes or an hour. I mean, this morning, when I made the $3,100, I had set the limit orders up and I got everything squared away. But from the time the first order got hit until the next one went out was maybe an hour and a half, 2 hours. I mean, I don't have all day to sit around. I got stuff to do. I got a beautiful autumn day starting, and I got a cup of coffee that's waiting to be made. I got stuff to do. So today I'm not going to sit in front of the trading desk. I'm working actually on a computer program that I'm doing. Nothing to do with trading. This is another application that I'm writing. But I have that time. If I was working, I would have been out the door. My orders would have hit. I would have been all set. This is what you can do when you gain the experience, but you have to just trade that one pair. You can't get 6 screens and all this shit and news and stuff coming at you. Trade. Don't use indicators or fundamental analysis or any of this stuff. Learn the principles of trading. That's what I teach, is the principles of trading. Not stuff, not indicators, not, well, when the red line crosses the blue line and it's Tuesday, then you're going to double up on your entry. And just crazy. It's crazy. Trading is trading, whether you're trading cars or currencies or old tires or real estate, doesn't make any difference. It's the principles of trading. And what's that based on? Well, the price is based on, as I said the other day, yesterday's last video, was interest rates are the managing factor for price action and order flow in that instance. But in relationship to what that causes, it causes order flow. So if you're trading cars, if there aren't a whole lot of cars available, then the price is going to go up, because if you've got a lot of people trying to buy, same thing with the real estate. Real estate prices have gone crazy in the last couple of years because you have so few people that are selling their properties. Well, you say, well, if the price is so high, why wouldn't you sell? Well, where are you going to live? You're gonna take your $200,000 house that's now worth $400,000, and you're going to sell that. And guess what? There's no $200,000 house to buy. You got to buy another $400,000 house. Well, what good did that do? Because when the reaction comes, that $400,000 house will now become $300,000. And so if you had bought at $200,000 your house and stayed with it, went to $400,000 and came back to $300,000, you'd be okay. But now you're in a $400,000 house and it's dropped in value to $300,000. Now you can't sell. So that's order flow. Guys, this is all about the order flow. And so when you're there and you're looking at that price action and you see an extended order flow movement, you have to understand what that means, and you have to respect it. You get two times your intended profit target, and you close up shop for the day. Why would you push it? Well, you shouldn't. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.